We are.
Good morning, Texas. Good morning, Louisiana. Good morning, world. Good morning, David Porter. Sir David Porter, how are you?
Fantastic. Thank you. How are you?
Doing great. We are live. We're live. We're live on Smart Money Culture TV and streaming across the world, of course. Had a great talk with our main man, Fly Mackey last night. The man behind the TV stations here. It sounds like we're going to be getting a lot more of them, David.
Yeah, that's fantastic, man. Fly, he's the guy that is a hustler, a core businessman. Yeah, happy to work with him.
Yep. Sounds good. Sounds like he did very well out there at the Super Bowl. He went to the Super Bowl.
How can you not?
I
That's
mean,
awesome.
hey, whatever it takes, brother. Bring it home.
I mean,
Let's go.
Super Bowl, it is a place where magic happens.
It is a place, boy. I'll tell you what. I couldn't believe I saw some reports on what people were paying for tickets. Did you see some of that?
No, but I know the history. It's no joke. And
It's
imagine
like
if you want to bring
$10,000, give or take a few grand. $10,000 a ticket.
and then bring another person or a group with you.
Well, yeah. I mean, it's probably best if you have one of those people invite you to their suites or something. But that
some
is
people's
just
yearly
crazy.
salary.
That's crazy. Yeah, of course you take a family if it's an average yearly salary, right?
Yeah.
I don't know. We'll see what the CPI data coming out today. That's the Consumer Price Index report is coming out today. Depending on what you're looking at, everybody has their thoughts on what's it going to be. We have Dow futures are down slightly. Kind of tepid though. Dow futures though, they used to really, I feel like they would really indicate what the day was going to be back before, but not such a great indicator. I think these days Dow futures down slightly. Let's see here. Nasdaq futures. Nasdaq futures down about 100 points. Of course, then you have crypto, which has just been having a ball. View live ratings on Ave. You can see here we have it has dipped below the 50,000 mark. We maybe do a pullback, of course, with a big run up, 16% on the 7-day on Bitcoin. You can see 16% on the 7-day, still over 4% on the 24-hour Ethereum, over 7% today, over 14% on the week. Binance coin looking good as well, almost 3% up, near 8% on the week. It's Solana, the runaway, really. Over 8% today, 18% on the week. What are they feeding those guys?
Yeah. Bitcoin bull markets.
Gold futures, which is how they set the price for gold all around. Gold futures are up over 1/3%. So it'll be interesting to see, of course, what the data is. So that comes out in about 2 hours, a little bit over 2 hours. Silver is up slightly. Palladium and platinum have been having a rough time lately. Palladium, let's see what that looks like. Up 1.5% on palladium. I figured it must bounce. It's funny because you always want to buy when the markets are red. You know what I mean? You don't want to buy when they're up. But no one wants to do that. Everybody's scared to do that. Make sure, guys, you go to atcostmetals.club and sign up. You can buy gold, silver, palladium, platinum at cost. The farmers in India have joined the protest. Did you see that?
In India, wow, that's pretty brave of them. The India.
I know. I feel like they don't joke around over there. Right?
Yeah. Yep. There's some type of push that the farmers don't agree with, and I think the farmers are right. So
I
I'm on
kind
their
of tend
side.
to go with the farmers. Here's a report that I saw. Let me just add this into my screen here. Here we go. Let's see what this woman has
Just
to
how
say.
significant is this if we do see large numbers of farmers on the streets again?
This is very significant, and what it is in many ways a continuation of the farmers' protests in 2020, when we saw sit-ins of about 300,000 supporters on the outskirts of Delhi who were agitating to repeal the farm laws. And successfully repealed them. And this is one of the few kind of movements that has really brought pressure to bear on the BJP and has gotten them to repeal the law.
So, well, on that, just explain to us what is the significance running up to an election?
So what the BJP would say to you is that the BJP continues to characterize India as the world's largest democracy, while protesting farmers would actually point to the fact that the BJP has systematically eroded the rights of citizens, including protesters themselves. And so the BJP is currently erecting with the help of militarized police forces, they're currently erecting concrete walls and barriers so that protesters cannot move into Delhi. They cannot engage in their action into Delhi. They've also shut down internet in some places in Haryana as a way to limit information flows. So these are just two ways in which you see that the BJP is demonstrating this stripping down of democratic rights.
Okay, well, given sorry to jump in there just there, but given that's the backdrop, what do you think the chances are that the farmers get what they want here?
So the farmers, I think, are actually demonstrating how social movements can challenge, these illiberal moments in democracies, and how they can push back on powerful governments. They were successful.
Interesting, right? What's really interesting is I don't understand what's the big push for why are farmers under attack all over the world? Isn't it just so weird?
Yeah, it's absolutely weird. It's probably part of the mega rich that they're buying up all the farmland and trying to put GMOs and all these pesticides and stuff in there. And then
some type of evil plan, right?
Not letting them get the funding and figuring out a way to take all the funding for themselves. Yeah. I feel like it's under a lot of good people's skin, and that's where I see that the farmers must not be wrong here.
Well, that's really that's kind of my take on it too, right? It's like the farmers are making our food, so how wrong can they be? The government's not giving us our food.
No, and they're trying to, which is strange.
It's strange. Yeah. So that's pretty interesting. Now I'm waiting for because there was another video I wanted to show here. Let me see if it pops up.
Yeah. You saw the seriousness. They shut down the internet. They're putting up barriers with barbed wire fences.
Where? In India or just in general?
Yeah. In India, that lady said that they shut down the internet.
Yeah, I mean, that's always a bad sign. They just did that in Pakistan, too. Imran Khan, whether you like him or not, probably don't really know him. I don't either. I think he was like a movie star or something like that. Maybe not. But he's very, very popular over there in Pakistan. And they really, really didn't want him to they really didn't want him to win. I mean, he's been in jail for years. And then leading up to the election, they said, we're going to put you in jail for 6 more years. Extend your sentence.
That sucks.
And then they cut off the internet and all these other things. And then so it's of course it looks like they did end up getting majority, but probably it is less than they would have. So this is some more stuff there here coming out of India. Maybe we need some I don't know. I'm not clear about that. The farmers protest are gaining steam, guys, across the world. Oh, this is the one I wanted to show you. These are barriers that you put up. You put up these barriers and the tractors plow through them. Craziness. Last video I'll show you. Just because it has music. I'm with the farmers.
Right?
Yes.
Yeah, man. Yeah, give them whatever they want.
Give them whatever they want. Keep the GMO out. Keep the government out of food.
Yeah, we're going to continue to eat beef.
Yes, no bugs. Eat bugs yourself, you slimy people up there. Eat bugs. So, yeah, we'll see. A lot of stuff going out. Stefan West, he's going wet. He's going crazy here in our chat. All kinds of crazy stuff. You're saying crazy stuff, Stefan. Protesting does nothing. All right, I can show this one. I can't show half the other ones or more. Silencing the people. I know, it's crazy. Can't silence us, though. We're building the decentralized media network on Global Boost. Decentralized like Bitcoin. Doing for media, doing for history what Bitcoin did for currency. Decentralizing it. Protecting it.
Yeah.
It's actually pretty interesting what we have going on with the internet. They're just making stuff disappear. All right, we just went to commercials on Smart Money Culture. We'll bring in Matt here in just a couple minutes as we lead into coming off our commercial break. He's got some cool reports for us. We're also starting our trading. Of course, he's been doing it for a while, but learn how to trade. And so this is going to be pretty cool for all you guys who watch out there and think, man, it would be nice. Sure, would be nice to make some money off of this trading. We have Matt to follow, and we have a system that you can use and learn how to trade. Sorry, yeah, something.
Yeah. Okay. Yeah.
Did you hear that?
That's good stuff.
Yeah. Okay, we're back. Thanks for joining us in Texas and Louisiana on Smart Money Culture TV. Hello, Matt. Matt Dixon, Sir Matt the Great. How are you?
Hi. Good morning. Good morning to you. Still suffering with this cold a bit, but getting better.
I see that.
In Dubai.
It's a lingerer, huh?
Yeah. And you're just talking about Khan, weren't you?
Yes. Is he a friend of yours?
Well, he's a world top cricketer, wasn't he? So
right? Yeah, I knew he was like some type of rock star, or movie star, or something. Yeah, he was like.
I'm quite sure
the guy is like. He's got rock star status.
He's probably been in films as well. He's been a prime minister previously of Pakistan. He married Jemima Goldsmith, as was, and she became Jemima Khan, of course. So she was very famous, son of a Sir James Khan in the UK.
Oh wow!
Son of, sorry, daughter of, sorry. That was Jemima Goldsmith. So yeah, he's a very, very, very popular, of course. I mean, I understand he possibly even won the election whilst even being in prison.
I mean, he basically, if he came out this far ahead and they did everything, I mean, I know our CIA, they hate the guy, and I know the Mossad, they can't stand the guy. So, they were doing everything in the world that they possibly could to stop the guy. And his party still came out on top, it looks like. And so, he probably, he probably won by a landslide. I mean, who knows?
Yeah. So, he's definitely very popular. So,
very popular.
We've got a little bit to talk about today. I want to obviously, I'll share my screen as usual and want to talk a little bit. I'm assuming, let me just see how best to do this. I think we'll go straight. I think we'll go to PowerPoint, actually, is probably the best way to do it. And I trust you can see my screen there.
Yes.
So we've got, I wanted to touch on, we've obviously got interest rates, well, not interest rates, sorry, we've got CPI out today, which is inflation, very, very important. It drives interest rates. And I've been talking quite a little bit about potentially upcoming recession in the US, but it's actually quite a rosy picture at the moment. And I just wanted to look at some of the signs that potentially signal a recession, indicators of a recession. So we've got a decline in real GDP, and we can basically tick or cross these. Well, we haven't had a decline in real GDP. In fact, real GDP, I understand, is actually still going up in the US. So GDP is basically, there's no recession signs there as yet. Decline in real income after inflation. Again, incomes are still staying pretty robust. So that's not a bad sign, not a sign of recession coming. Rise in unemployment. Well, unemployment is currently 3.7% in the US, which is absolutely amazing. And the long-term average unemployment rate in the US is 5.7%. So we're a full 2 percentage points below that at 3.7, although it was 3.4% last year, at one point last year. So it has begun to edge up a little bit, but it's still in such a really good situation. The unemployment rate is still very, very low in the US. So it's in a good situation at the moment, but it's beginning to see a little bit of erosion, that unemployment is rising a little bit. Then we've got stagnation of industrial production and retail sales. Well, we'll look at that. Industrial production is staying reasonably robust, and retail sales, well, we're beginning to see a little bit of a decline, and we'll just look at that here. This is looking at retail sales. And we can see that obviously in 2020, they fell off a cliff with COVID. And then there's that massive stimulus package. And they have been declining consistently here. Retail sales have been declining. They're still in positive territory. So that's not a bad sign, the fact they're in positive, and it's kind of long-term, it's not a bad situation to be in. But the fact it's been on such a steady decline, the trend is still currently, down. So we'll need to watch that fairly carefully to see where things go. Now, this was what I showed you. This is actually what's coming up retail sales. Interestingly, again, just mentioning that on the decline, well, the previous reading was 0.6%. The forecast, which is, I think they're due out this Thursday, so only a couple of days' time, the forecast is for a fall to minus 0.1% on retail sales. So potentially we really are beginning to see signs of a slowdown, but it's very, very early days. This is a situation over the past 50 years when you look at inflation and recession and the relationship between them. As I've said before, every time you get a spike here in interest rates and inflation in particular, when you get a spike in inflation, that usually coincides with a recession. So you can see here back in 73, here in 1980, we're still suffering recessions in the early 80s there. 1990, again, a spike up there with inflation and associated with recession. Again, here, spike up, recession. Here, we didn't get a recession immediately there, but it did come shortly after with the further spike up in inflation. We got quite a serious recession there. That was associated with the financial crash of 2008 onwards. So that was a very serious recession. That's what started the money printing back then. And then now we've had this very serious rise in inflation, and they've raised interest rates. They've not yet begun to drop interest rates. But as we've had this spike, you would normally expect it to be associated with a recession, and we've not yet seen that. So I'd just say I would say we are on recession watch. And quite interestingly, I'm looking at what the market is projecting, the probability of recession in the US. Well, it's not that high, although it's above 50-50. Right now, there's a 54.49%, this is according to the markets, a 54% chance of recession coming in, this year, basically. And this was the figure, right up to date figure, Feb 24, that was the expectation or the projection of the likelihood of a recession. And that actually is looking as though it's projected to rise. The likelihood of recession is projected to rise into the future. That figure there should be 24, not 23. So there is a more chance. The chances are that we're likely to see recession, moving forward. And here's just another look at the expectations of whether we're going to see recession through early 24. And the expectations are, and this is effectively market expectations, and this is actually a famous analyst here, he expects recession into 2024, some point early-ish 2024. So we're not yet seeing it, but obviously the signs are there. Now this was the previous, it was only, it might even have been yesterday, the expectation for the inflation rate coming out later this afternoon. It's only a couple of hours away. And even in one day, the actual rate has already, the forecast has fallen again. So we are expecting inflation to fall. Now that obviously is a good sign as we fall towards the 2% target, but they have a real history of overshooting the target. So it's highly likely if inflation is falling at this rapid rate, it's going to overshoot the 2% target, go below that. And that's where you'll see potentially moving into a deflationary world again. And that's precisely what we had back in 2008. They were really struggling, obviously, with the financial crisis, but even before the crisis actually hit, they were struggling with failing growth. And, with that recession that happened then, obviously, we had effective deflation, and that's why they had to print money to try to reflate the economy. We've had the crazy money printing that's happened over COVID, and we're still living off the back of that money printing. And as I say, researchers and analysts say that this money printing isn't really isn't particularly good at creating real economic growth. It looks good on the surface because there's so much money more to spend, so much more money into risk assets. Everyone feels good because the price of everything's going up. When I say everything they own, I'm talking about. Obviously, the things they buy, it's not such a nice story.
Their house.
The house, their investments.
Even cars. Cars have been like, I think my cars went up in value, believe it or not.
It's absolutely amazing. I sold a car not long ago in the UK. I was shocked at the second-hand price I got. It was absolutely amazing. So yeah, even cars, even second-hand cars, prices are really, there is inflation out there, no doubt about it, but it's falling at the moment. And the danger is it's going to fall too far, too fast. So this is just a look. We looked at this yesterday. Some people have said that the DXY, the dollar index, is set to fall very sharply. Well, let's see what today brings for this. At the moment, this is all higher highs and higher lows, as we said yesterday. And we've got quite an impulsive move here with the solid green candles moving up. And we've got a really choppy move here, which is indicative of a corrective move to the downside. So when you're seeing upside in the direction of the trend, you're seeing a lot of solid green candles here, then choppiness to the side. Then the next move up, big green candles, and then choppiness to the side. The next big move up, big green candles, choppiness to the side. So I would expect that we're probably going to see more movement up on dollar index at the moment as things stand from this. and I stand to be corrected, and let's see what inflation comes out as, but maybe it won't be falling quite as fast as people expect. So we may yet see a little bit higher to come on dollar index. That's how it's looking at the moment. Just disregarding anything you hear about out there on fundamentals, just from a technical point of view, as I say, it's looking at impulsive up, corrective, and I would think it's looking like further impulsive to the upside.
That's what that chart would tend to read. I would agree, and that would mean a stronger dollar over the short term.
Yeah, and stronger dollar would mean we're probably going to get a pullback in risk assets. And are we due a pullback? Well, probably. Here's looking at Bitcoin. So, I was pretty close to my target. I said 49,900. We reached just above that so far. Yeah. And one of the reasons, in fact, the target was actually, I reassessed the target. The target was when you measure a Fibonacci measurement from the A here, from the bottom to the top of this A here, that's 100% movement. That's the one figure there. That's 100% movement. And all you do is transpose that same measurement over to here. And the 1.618, which is here, that Fibonacci golden ratio, isn't it amazing that the price actually spiked up to the 1.618 and stalled for now? It's stalled there. Now it may break through, and it may be that this, instead of being ABC, it could be 1, 2, 3. And then we get a corrective wave 4, and then a further push up in wave 5 to new highs. That is entirely possible. So I'm not saying it's over here at ABC. It could be, as I say, 1, 2, 3, and we could get a 4 down and 5. But what I'm saying is it's highly likely, with this price having hit the golden ratio precisely to the dollar, which is amazing, isn't it? That you can do your technical analysis, and to within $1 of the Bitcoin price, which is currently priced around $50,000, and you can get it to within $1 using this golden ratio Fibonacci expansion here of this first wave here. So that told us where Bitcoin was likely to turn, and so far it's turned a bit, and it'll be really interesting to see, because I think today's inflation is going to be a market mover. So let's just see what it comes out as. And it's not whether it comes out lower, it's whether it meets or beats or fails the actual expectation of the market. The market is expecting a substantial fall in inflation. If that doesn't materialize, then that won't be good for risk assets short term. But again, I don't like trading around news events, because you don't know what the outcome is going to be. It's a bit of a gamble. So I prefer to wait and see, and before I actually take any fresh trade. But that's quite interesting. And then Solana, again, another potential turning point here. It's done, as you said, that you highlighted that as one of the amazing growth assets. It's been phenomenal. So we had the move up here, which again is kind of impulsive. They're not overlapping. It's actually impulsive moves up. Then we get an overlap here, A, B, C overlap. You can see that this wave overlaps this wave. So that's the overlapping corrective wave. What a B wave is corrective. And then we've got more kind of impulsive moves to the upside. And then we mentioned this a couple of times. We've got what's called regular bearish divergence here, again, where we see higher highs on the price and lower highs on RSI. And that is a signal that price may be about to turn. So we would normally wait for the end of this candle, this red candle here, see what it is, because we look for at least one other indicator to confirm this regular bearish divergence. Ideally, you look for a couple of indicators. So a candlestick is one indicator, and you always wait for the end of the candle to actually make your decision. But I'd look for other technical indicators as well, and maybe even some fundamental information like what is this inflation report going to show us. So there's a few little tips on how you can trade effectively, and that brings me on obviously to our Learn How to Trade course. Now, the whole range of options.
The highly anticipated. Learn how to trade.
Thank you to Bruce and the Impact Live and David for obviously you've negotiated a package on behalf of your listeners here, whereby there's a whole range of packages. There's a beginner package. There's all sorts of packages where you can just test it, try it out, and try one of the modules, for example. If you like it, you can go for more modules, or you can go for the full package, or an accelerator package with much more hands-on material. it's a really comprehensive, very professional course, which will definitely, I think anybody can learn something from it, even experienced traders can learn something from it, but it's also structured in such a way that beginners can really, can do this step by step, module by module in your own time, and you can learn effectively how to trade. And nobody knows the future. Traders don't know the future, but trading is actually a skill set which can be learned. It's not something you're born with, and it's not magic. You don't magically know where the prices are going, but it is a skill set that can be learned. And so obviously you need to learn it from somebody. Now, obviously I've had getting on 40 years worth of trading experience here. I personally got a master's degree in finance and investment. I've run an investment fund, regulated investment fund in London. So I've got a wealth of experience, 40 years worth of experience condensed into this course. And it's not just myself. We've got a top psychologist on the course. We've got an AI element to the course. It's really comprehensive. So I'm really pleased that, to have partnered with Bruce, and I think with Bruce and David and Impact Live, Impact Money. And I think they'll be able to share with you a discount code, because they've negotiated a 10% discount. That's right, isn't it, Bruce?
That is correct.
Yeah.
And that's Trade Smart 10. Right? Trade Smart 10 is the code. I just
I'm sure you'll be. I haven't actually put it on here. We can share it again on other editions, or you can share it yourselves. But yeah, Trade Smart 10 is the discount code. You can go to sign up at learnhowtotrade.club. Just input that discount code and you'll get 10% off the prices of these packages. I don't, obviously it depends. Everyone trades differently, but this will give you the foundation to trade in a better way. And I would suspect that if you are a trader of any sort, you'd very quickly pay for your course with the savings and additional, it's not about just making money, it's about saving money. Some people can make money, then they lose it all, but it's actually about making and saving money when you're trading. And so all those elements will be covered. And I would expect your course costs will be covered very, very quickly if you're even a modest type of trader. So
if you're even a modest type of trader, I mean, this is ways that you can really do well. We've done very well historically in the past. And then as well, one of our favorite platforms is KuCoin. And so if you want to join there as well, and we'll get all these link juice updated. David's in the back there learning the stuff. In KuCoin, you can just go to @CostBitcoin, @CostBitcoin, and join on KuCoin there. And you can leverage there, even as an American, I think up to 5x, which is a lot. It's a lot of leverage.
Actually, that's perfectly sensible, because you see these futures platforms out there where you can leverage up to 1000x. And that is fine for those people who want to have a gamble and a bit of fun, but it isn't sound and solid investment. Right. But up to 5, potentially, I mean, even 5 is, as far as I'm concerned, is a very high level of leverage. But yeah, that's fantastic. It sounds, obviously we all know KuCoin. They've been around for a long, long time, very reputable, got an amazing set of suite of products. So yeah, I think they're a great exchange.
Very, very good. Well, I'm pretty excited about it. I know now, did you incorporate your EVE platform in this as well?
Yeah, absolutely. So the EVE platform, we promise we will go through it at some point, but we're undergoing some major upgrades. These really are cutting edge upgrades, which is really taking it into the future of trading and making crypto into a sustainable, sensible trade, rather than the currently it's kind of a bit of a Wild West in terms of trading, people making and losing money. But we're trying to make it more accessible to the masses and make it sensible. So we are including the EVE platform full access to the platform within the course. So you basically get that for free within the course. So awesome. All in all, it's excellent value for money, especially with the discount that you'll get.
There you go. Pretty cool. And then talk to me a little bit about how the course works. So are there certain classes, or is it like a tutorial, or how does it roll out?
Yeah, there's depending on the different level that you take, you can start off with just the tutorials, which again you can listen to those over and over again, and there's really important information and guidance there. But there are actual classes, workshops where you can actually have hands-on experience and to discuss the various techniques and see how you actually implement them within your trading. So there's a whole range of different levels there. Depending on whether and depending on the time that you have as well, you might just want to try a course, the beginner course perhaps, and if you like it, then you can upgrade and go for the full standard course. So there's all sorts of options there, but it is very much hands-on. So we're not just leaving you. Otherwise, you could just go on YouTube and listen to a bunch of videos. The problem with doing that is you don't know which videos are genuine and which have genuine academic backing and foundation behind them. We're actually having this course CPD accredited, and that's professional development points. It's a UK thing, I think. It may be worldwide, but it's certainly in the UK. And employers can actually put their employees on this course to earn these CPD points. They have to earn them to show that they're continuing their ongoing education within the financial world. And so to be accredited for that, it means your course has to meet certain standards and referencing and all sorts of hoops that you have to jump through to make sure the course is of an adequate quality and standard for people to gain those accreditation points. So it is actually, again, it's been structured in a very professional way, looking at all the academic literature, and it's not just some guy's just idea of how to trade. This is actually genuine. So I think there's an awful lot to be learned, and you don't become a top player at any sport or any activity without doing some training, and I think it's vital. I mean, we're passionate about trading and training, and I'm passionate personally. That's why I'm doing it. I've been offering the free training and trading courses and updates and so on within Twitter for such a long time, and I do it just because naturally the majority of retail traders actually lose money, and it's a very high percentage of retail traders that lose money. And I'm hoping to turn that around with the people that get on this course, to turn you around from the 95% of retail traders that lose money, and try and help you to become among the 5% that actually make money. And that's the difference. It really is that 95%. It's a massive differential between those who win and lose. So it is important to learn how to trade properly.
95% is a huge number. That's something that you want to improve that number for sure. We're just coming in. Most of your report was during the show. We've been on commercial though for the last couple minutes here on Smart Money Culture, so I'm just watching that. The markets are a bit tepid. Everyone's waiting for this CPI data to come out. Big push though, really, in the crypto. And they passed this bill, this $95 billion bill in the Senate. And I think if that passes the House, the markets seem to tell me that it's going to pass, because they look like they already think they have that money slotted.
Yeah, I mean, don't forget. I mean, I know it's a horrendous amount of money to be out there spending, but they don't do anything for nothing. So you can be absolutely certain, whilst there's money going to Israel, money going to Ukraine, you can be absolutely certain that they'll be getting their pound of flesh from that. So they will be getting some benefits from that. Nobody, America's certainly not stupid. They don't do stuff for nothing. They'll be benefiting from it. So I know there will be.
It's those contracts. I mean, we are maybe the largest arms dealer in the world. So that's a lot of those contracts are going to come back here, and then as well, just the business, putting together those contracts is absolutely huge. So,
but it's not just about the war, which breaks everything down. It's about the construction, which comes later to build everything back up.
It is. And welcome back, Texas and Louisiana. You're watching us on Smart Money Culture TV. It absolutely is correct. When I see them completely demolish these certain buildings, I'm like, yeah, somebody's already got that lined up, or at least their eye on the target on the rebuild. When you see the university, completely obliterated over in Gaza or in the Ukraine or something like that, and more than likely that's going to be rebuilt, and those contracts are massive.
Absolutely. US construction is the biggest in these areas of reconstruction after war. So, for example, with what's happened in Russia, Ukraine, the US are already in there rebuilding, even though they're still at war. So there's no doubt it's not just giving money away. There's business deals being done.
Yep. Well, awesome, Matt. Thanks so much for joining us again. Pretty excited. We'll be putting out the course as well, and hopefully we'll get some traders in here that we can start getting in the profit in that 5%.
Fantastic. Thank you for having me again. Thanks, David. Thank you, everyone. Awesome. Look forward to catch up tomorrow.
Perfect.
So Tucker Carlson, a lot of stuff coming out from Tucker lately, and I can even just actually start right here because I have my Evade tab up. So I'll start just by that, and then I'll swing over to my X account, my favorite platform, to share certain stuff. Evade is obviously one of my favorites as well, but you can see Bitcoin just kind of bouncing around here around that 50,000 mark right there, just kind of bouncing around. A lot of money in there, a lot of money, and not a lot of Bitcoins. Not a lot of Bitcoins out there. Now that doesn't mean that couldn't come back quite sharply, because it absolutely can. Okay, here we go. This is what I wanted to show. Ukraine cannot win its war against Russia. Tucker says Ukraine doesn't have the industrial capacity, neither does NATO or the United States, and it doesn't have the people. He's been saying this over the last couple of days, and that Russia is able to produce munitions, a lot of munitions, and they're able to do it very cheaply. Let's see what he has to say.
It became very clear to anyone paying attention several months ago that Ukraine cannot win its war against Russia. The Ukrainian military will not be able, even with Western backing, hundreds of billions of dollars of it, to expel the Russian military from parts of eastern Ukraine. Ukraine doesn't have the industrial capacity, neither does NATO or the United States, and it doesn't have the people. Russia has 100 million more in population than Ukraine does. That means that further support from the West for the Ukrainian military only means more dead Ukrainians and a further degraded Western economy in the US and in Germany particularly. So it's not simply a fool's errand, it's self-destruction. It's insane, it's cruel, it's abetting the killing of an entire generation of Ukrainians. This is very obvious. No honest person at this point will deny it. It became very clear to anyone paying attention several months ago that Ukraine cannot win its war against Russia. The Ukrainian military will not be able.
I was queuing up my next thing to talk about here, but let's talk about that for a second. I tend to agree. I don't know if I tend is the right word. I agree, and that's actually what Elon Musk said in the beginning of the war. Was that we're just going to kill 500,000 or more people, and we're going to get the same result. I fear is what he said. I fear we're going to we're going to get the same result. And when he said that, you had to say, well, he's probably right. And here we are, a year or two, almost 2 years later, or something like that. And 500,000, I think, is I think that is a conservative figure, guys. Each side likes to say 500,000 on what died on the other side. And so who knows what the number is? Probably somewhere in between 500,000 and 1 million beautiful, wonderful people. It's a horrible tragedy. What's gone on there. And, one of the things that Tucker said multiple times, or he really kind of brought up to where people see it, is that they were actually at the bargaining table, and Britain stopped them, or US and UK stopped the negotiations. So interesting stuff out of Rand Paul the last couple of days. He definitely seems to take the stance that this bill is passing Here he is. First of all, I actually put us from yesterday on top of this, where I talked about. It's unbelievable how much. And when I talk about the tax rate too, guys, so the tax rate is the government spending rate. The government's budget is always balanced. Always balanced. There's no such thing as an unbalanced budget. Every dollar that's spent, they take from you. And they either take it from taxing you, or they take it from inflation. It's unbelievable how much. It's like it's easy to kind of, from the outside talk about how the numbers are looking okay and this and that and the other, but that $95 billion is going to be stolen. It's taken from you and me. It's taken from us without asking. If they had to take the money from us via tax, and I'll play Rand Paul there in a second, but if they had to take the money from us via tax, it would be a different story. They wouldn't be able to. Everybody would say, no, I'm not paying it. So what they do is they take it, they steal it, they call it inflation, they dilute your money supply, they print up more money, they don't ask. You have no representation. You have no fallback, no nothing. Your actual tax rate is what the government is spending. So your actual tax rate is literally like 4%. It's 4 times. It's 4x higher. And that's why we talk about getting into gold and silver and crypto, but old blockchains, old ones, Bitcoin, Litecoin, Global Boost, these ones that they can't inflate and stuff. Let's listen to Rand Paul. This is Rand Paul yesterday. He did a filibuster. It didn't last long. Mitt Romney and the rest of these rhino Republicans folded very, 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 very quickly.
Open the champagne. Pop the cork. The Senate Democrat leader and the Republican leader are on their way to Kiev. They've got $60 billion they're bringing. I don't know if it'll be cash in pallets, but they're taking your money to Kiev. Now, they didn't have much time, really no time and no money to do anything about our border. We're being invaded. A literal invasion's coming across our border. 800,000 people came illegally in the last month, and all they had time to do in the Senate was get the money, get the cash pallets, load the planes, get the champagne ready, and fly to Kiev.
If it doesn't make you upset, you're not paying attention. Because you're gonna feel it. You know what I mean? You are paying that. So just to run through some numbers here again real quick. So $1.6 trillion is about as much as we're paying on the debt from the US dollars that we borrow, quote unquote, from the central bank. So remember, so here's the deal. Break it down a little bit for everybody. So the government's budget is always balanced. The way that the central bank is and the government kind of play off of each other is the tricky part. So the government can't come and take the money from you because you won't give it to them. You'll be in the streets protesting. If your tax rate was 4x what it is right now, you would be on the street protesting. So they know that they can't take it from you. So what they do instead is they have the central bank, and the central bank, of course, makes a lot of money at it. The central bank prints the money up, and then they use it. Every $100 comes with $3 of debt to the central bank. As well, that money is diluting your money. So it still comes out. There's only, you know what I mean? It doesn't come out of nowhere. So that's the scam. And the central bank basically has control of everything. We don't need the central bank. Russia doesn't have a central bank, and they're fine. Actually, they're probably better than fine. Syria doesn't have a central bank. They're fine too. That's why we always try to go after them. But that's the scam. So this $95 billion, they're able to just pass this and give your money away for endless wars that you don't support. Ukraine's the easy one. Everyone doesn't support that. Israel, people start to get emotional whether they support it or not. But nobody really supports the Ukraine war over here. I mean, we've put how many hundreds of billions into that, and there's no end in sight. That's the thing. They're going to be at a bargaining table soon. They're going to be at a bargaining table making a deal. And, so, but that's, I think, the part that everybody needs to understand. So far this year, the government has already spent 1.6 trillion. So let's take that 1.6 trillion because it keeps coming up, right? And I only have a couple minutes left here. So $1.6 trillion is the amount of money that it takes to service the debt, $34 trillion. That's how much we're going to pay. We're going to pay the central bank back for letting us borrow paper money. And the reason we're borrowing paper money, they don't borrow from China. They don't borrow from somewhere else. It's all baloney that they fed you your whole life. Not true at all. They borrow it from the central bank because they're going to tax you. The central bank is going to tax you for that money via inflation. So the central bank says, no problem. I'll front the money. You guys go ahead, do what you want. I'll just take it from you, from the Americans on the back end. They won't know because we'll call it inflation. Mm-hmm. And this is the biggest scam going. This is the scam of all scams. We didn't have a central bank before 1913. They passed the Federal Reserve Act in the late night on a Friday night before some vacation or whatever. We weren't supposed to. That's like what we were fighting against, this whole system, central banking system. And it's totally corrupted us to a point where we're paying, it's not sustainable. And if people understood what they were paying, they would be out here in the streets like they should be, like the farmers, shutting it down. Anyway, we'll be back in 5 hours, 11 a.m. on Smart Money Culture TV, streaming live around the world. We love you guys. Thanks for tuning in.
Yep. Stay on top of the scheme.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.